A wonderful good day, ladies and gentlemen. That's Commodity TV out of Munich, out of our studios here today. And again, we are here with Bryan Henry, the Broker of the Year 2013 from PI Financial. We have met last month in Vancouver, where we did our famous beach interview. And I'm happy that I have Bryan again here, because now the summer break is gone and a lot of good things happened. Bryan, thanks for coming over.
Johan, thank you.
Always excellent to have you here.
Good to be back in Munich.
Absolutely, great. And we will have some Oktoberfest also, later on.
Right.
It starts today. Yeah, I just said it. A lot of things happened since we did the last interview. That's probably some 6 weeks ago. Yeah, what, from your opinion, was the most exciting event?
Well, I think we had a really good August. And we saw a lot of liquidity in the junior markets. We saw a lot of improvement in sort of the middle tier and the higher end of the markets. I was looking at the GDXJ, which we discussed last time I was here, which was July 5th. And the GDXJ, which tracks the gold miners, is up 40%.
Yeah.
From
how many gold miners are in that index?
I don't know how many are actually in the index, but it's a general, it's a real market.
Mm-hmm.
Yeah, it's a liquid market. It's listed on the New York Stock Exchange, and it generally tracks the gold equities. And when I was here last time, it was July 5th, and we had just seen that big flush. I don't know if you remember that. And we talked about a bottom. Well, I think it's safe to say I think that bottom is in.
I think you predicted it right.
Yeah, well, broken clock's right twice a day.
Okay.
But no, I think it's up 40% from then, and I actually think it's going to continue. And one thing I'm noticing in a lot of the charts is that a lot of the gold equities themselves and the GDXJ are starting to see that break through that 50-day moving average, and that 50-day moving average is just starting to turn up. So that's usually a pretty positive sign. And then if you drop forward and you look at the TSX Venture Exchange itself, which has a lot of gold miners and a lot of mining equities on it, I actually think we're going to have a pretty good run off the bottom. I think we're still less than 1,900 and the high end of sort of 900, but I think we could see a pretty good run from here.
From the perspective of an investor, whom did you see move into the market? Because somebody has to buy the shares. Is it, let's say, more a little bit the retailer? Is it the funds coming back, or the institutions, or was it short covering?
I think we're seeing, I'm from my perspective, because I'm a retail broker, I'm seeing a lot more retail come into this market, which is a really good sign. Usually retail tends to buy near the tops, which in this case, and I guess it's my job to try and get them in early. Buy early, buy often is what we say. And it's been a really good thing. And I think some of these institutions that have seen some really, really hard times over the last couple of years, starting to see a little bit of relief. They're starting to maybe change up their portfolio, sell some of the losers off, and start looking at some of the better performers in the marketplace. And we're seeing a lot more financing, which I think from our perspective, I think that's a really good sign too. We're starting, they're still at that very bottom end of the market that we always talk about, those companies that are maybe the lack of management, lack of good assets, or lack of direction.
The lifestyle companies.
Lifestyle companies. Those ones we're still seeing, hopefully a lot of those sort of disappear over the next little while. They're still having trouble getting funding. But at that middle tier again, in the higher end, we're seeing a lot of funds get raised. And if, any indication just on this trip on my BlackBerry every afternoon is new financing, new financing. So that's a good sign.
So that means the money moves back into quality?
Absolutely.
Can we say it like that?
Absolutely.
Okay, good. So you would say that the bottom of the market we saw. Now we saw the first wave. Also we saw a spike this week in the gold price. What happened there?
Huge spike. Well, we get a surprise from the Fed. There's going to be no taper. And we were discussing the taper earlier, and just to put it in simple terms, what the taper was or is pulling back of liquidity from the U.S. Fed. And essentially what a taper means is they would taper back their bond buying program in the U.S. So with no taper, it means the U.S. dollar comes off a bit. It means relief for commodities, and especially gold. So I think we had a $60 move. And I haven't seen a move in equities and commodities like that, based on a Fed decision in a long time. So we saw a very, very positive reaction.
Okay, I see. So coming to gold, what would be your good picks for the gold sector? As you are positive on that, I know that. Can you just describe shortly about?
Yeah,
what companies you like?
Some of the charts that I was looking at, just based on charts, companies like Allied Nevada, just so beat up. One time $40 stock, and now trading, I think, around $5. Was looking at IM Gold this morning, so it was more the middle sort of tier. Barrick actually, as a relative performer, has been sort of relatively outperforming the rest of the space off the bottom. What else was I looking at? New Gold. New gold's one of my favorites. Great leverage to the price of gold. And I can go on and on and on. I noticed big financing for Sullivan this week, which is another great company. And and again, I urge everybody to pay attention to those balance sheets and how much cash and how much debt, and try and stay away from the ones that are have too much debt and lack of direction, and maybe those all-in costs are too high.
Yeah, that's right. I can remember the last time also in July when we spoke, you said something very positive about uranium.
Yeah.
What's going on with that sector? Because the price is still at $34, $35, but we saw some good movements in companies. And I think you recommended Fission.
Yeah,
also Fission Uranium.
Fission was one of my favorites and still remains one of my favorites. That discovery at Patterson Lake is something special.
Have you been to the site?
I have been to the site. I was fortunate enough to go a couple weeks ago, and I went with President and head geologist Ross McElroy, and it was a really special trip. I left my house in the morning from Vancouver, was on the property in the afternoon, and was home in the early evening in time for dinner and a glass of wine. So it's a very, very, very well-run mining camp, one of the best I've ever seen, and it's a very special project. Very special project.
So that means you can drive up by car. The infrastructure is perfect, sounds to me.
Infrastructure, not necessarily perfect. It's still in the Athabasca Basin,
but you don't need to fly in, fly out all the time, like in Alaska.
No. There's a 2-lane highway that runs right next to the property. Yeah, 2-lane highway runs next to the property. Now we flew in from Fort McMurray, but just because of for sake of time. But it's it's right next to a major highway, and it's really in classes of discoveries. I was always taught by people that were a lot smarter than me to sort of make a differentiation between what is a discovery and what is a world-class discovery. And in my opinion, I think Patterson Lake is a world-class discovery. And if you look at the best analog to what Patterson Lake is in recent history was Hathor's Rough Rider deposit. And Hathor's Rough Rider deposit, after a discovery in 2008 and three full seasons of development, was purchased by Rio Tinto for $654 million.
Pretty good outcome.
Great outcome for anybody that invested all the way along, and you didn't have to. Hathor was one of those stories. You didn't have to own it before the discovery. You didn't have to buy it, necessarily early on. It gave you a shot as they were developing it to continue to buy and buy and buy. And that's one thing with Fission, as a lot of people have asked me, well, is it too late? Because when we were here, even in July, the stock was 65 cents. I believe it closed at $1.24, 25 here, so it's up almost 100%. Is it too high?
Since July.
Since July. And
I
think that as this project gets de-risked and goes forward, and it becomes more clear how the size and the scope of this deposit and the grade, I think you can just continue to sort of edge in there for risk portfolios only. But I think it's going to be a very special deposit.
I think they have also a junior partner in the Patterson Lake area, which is called Azincourt.
Azincourt, yeah.
And what do you think of this company? Of course, it's very small. It's $6 or $7 million market cap only. But probably they have the way in front of them what Fission did already. Is that correct? Or how do you see
that? That is correct, yeah. They have an agreement on the Patterson Lake North project, which is probably, as far as an address goes and geography goes, one of the, premier projects related to Patterson Lake South. So, and they're
in the same structural
trend. Same structural trend.
Yeah.
Same structural trend. Well financed. Their partner is Fission, so you've got the best partner in the business. They've got access to that whole technical team, which is super important. I think one thing that everybody needs to look at when they're looking at any of these companies that have popped up in that Patterson Lake area, because it's very popular, and I don't know how many now, there might be 20 or 25 companies, is largely underfunded, most of them, and it's very expensive to do work in that area. And there's a lack of talent, really, that understands how to work in the Athabasca Basin and make these discoveries. And one thing to Ross McElroy's credit is that Ross knows the basin probably better than anybody from an exploration perspective. And they've actually patented techniques on how to explore and find uranium and more deposits like Patterson Lake South. So, and from Azincourt's perspective, right now they're fully funded for all their programs, which is great. So they have money. Their chairman is Ian Stalker, who sold Uramin.
Quite famous guy.
Yeah, he was the CEO of Uramin when they sold for $2.5 billion to Areva. So he's got the experience in the industry on developing projects and selling them. And then Ted O'Connor, their president, ex-Cameco, understands how to explore and look for projects in the basin as well. So.
Okay, great. Now we were talking about discovery and exploration. Last final sentence from you. What else? What companies do you think are also interesting in the uranium space? Coming a little bit to the producers, maybe also.
Well, again, you want to, if you're looking at the uranium space, you know, a lot of the smart money tends to put their sort of bets in early. I was talking about it with a colleague of mine who knows the space really, really well, and he's noticed with the last run that we had in uranium, sort of that 06 through 07 run, that a lot of the big bets were made by smart money 2 to 3 years earlier. So if you're looking at the space, you want to definitely look at ones that have leverage to the price of uranium, which we're going to hear from, I think, Rob Chang later, as to why we should look at uranium and why we should invest in uranium. And you want to look at ones that have the capacity to finance. So, and you know, when you're looking at the high end, that Cameco is probably the leader in the pack. Yeah. So for the portfolios that don't want to take on the risk of development and discovery, definitely Cameco at the high end. And then if you're looking for that development and discovery potential upside, I think Fission is probably the best bet in the space. You bet on sort of what has already happened will continue to keep happening with Fission, and I think it's just going to grow and grow and grow.
Okay, well, wonderful. So it looks like that we went through the valley of tears in the markets. It's gonna go any better? Do you think too?
I really do. I think the liquidity is going to continue, and I think even the commodities sort of space and the commodities index as a whole, I think it's going to surprise people. We've on the upside, and we've last 6 months, and we talked about this earlier, is every headline that we've seen has been negative towards the commodity space, negative towards China. China's is done,
not growing and whatever.
Growing, it's done, and can you believe the numbers? All emerging markets are getting crushed. The ones that rely on commodities. Something to note that happened this week as well is the TSX broke out to a new one-year high.
Okay.
And that's 49% of that index is based on resources, and we're seeing some money start to come into the TSX finally as well. So, and that's largely driven by high energy prices, and finally we're starting to see the energy space in Canada move, but also precious metals and other commodities as well driving it. So.
Okay, wonderful, excellent. So I hope see you soon, and then we will see what the markets did. We will watch carefully what you said. Bryan, thank you very much.
Thank you, Johan.
Thank you.
Much appreciated.
Ladies and gentlemen, that was Bryan Henry from PI Financial, and you heard it. It looks like that we are, we went through the bottoms of the markets, and actually he said we had a great summer. Weather-wise, yes. Market-wise, now it's improving, it's coming. And watch out for, probably the precious metals, but also for uranium, please. And I think he said it right. Fission Uranium is probably the hardest play now in this area of resources. And also watch out for the little brother Azincourt. It's wise to have a look on their websites. Thank you very much for watching us. It was Jochen Steiger from Commodity TV out of Munich. Thanks and bye-bye.